The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, we saw the Soy Complex was the strength in the grains and oilseeds on Tuesday. Corn and wheat ended up a bit mixed, though. Kind of a disappointing close there. Cattle futures had a solid day as well, while the outside markets were watching things there with more economic data out here today and the Fed meeting wrapping up tomorrow. Plenty to discuss, some news headlines thrown in there into the market as well. Joining us here today as we try to make sense of it all, market analysis with Jacob Burks of agmarket.net. Jacob, good to catch up with you, buddy. I hope things are going well.
Man, it's a beautiful day. We saw a lot of rain clouds yesterday, just not as much rain as we wanted to. But yeah, we're having a good time here, especially whenever these markets can give us some surprises like we saw today.
Yeah, and I didn't even mention weather in my setup there. That's another thing to throw in here. We got a lot to talk about today, and really, obviously, let's start with the weather. We're in a weather market, and then you throw some of these other headlines and other just general moves and things in this market on top of that, and it does give us a day with plenty of movement. But looking at the market, weather, of course, is top of mind. And what's the latest you're hearing? I know there's a lot of concern from farmers as we're really, especially in corn, and kind of in a key pollination time frame or getting very close to it.
First of all, it almost gets comical when you start talking weather nowadays, because everybody has, through the internet, has become a certified meteorologist, and
yes,
everyone has all the tools at the fingertips. And you look at the markets moving, the instance a run gets done, and one of these either GFS models or models, and the markets are just sporadically trading off of a 15-day forecast. So it can become very aggravating, when you're seeing these moves go back and forth. But the facts of what's actually hit the ground, is kind of scary. I mean, when you go back and you look at just what the drought monitor's done, and the biggest year that we can compare this to is the 2012 comparisons. And, you look at it from a drought situation, our drought problem seems to be, even worse than where we were at that point in 2012. So the facts of it are a little bit, scary. We had the potential to have a pretty big disaster, but we're at an early stage where we're still looking at a, rain forecast in the future that could become much better if we get the northwest flow that typically comes from the El Nino, which we officially went into last week, I guess. So there's a lot of potential there for some problems to be solved. We're at an early stage of growth, and I'm no agronomist, but the fact that there's still potential for this to make better, it puts a lot of fear in this market, and that's why you see a lot of things going back and forth. So.
Well, you are a market analyst, maybe not a meteorologist or an agronomist, but you are an analyst. And thinking about this corn market and wheat too, and we'll touch on wheat here in a minute, but I was a bit disappointed with the closes in corn and wheat on Tuesday. And with the corn specifically, I know new crop just above that 550 level here at the close on Tuesday. I'd have to think for some growers, depending on how they feel about their crop of the field, if they haven't gotten some marketing done, man, that feels like a pretty solid level and a level that I think a lot of folks are probably taking a hard look at here. Jacob, what's your thoughts with just where new crop corn's sitting right now?
Well, I think first of all, you got like three different things that we look at, and a lot of it's more technical than anything. And you saw the head and shoulders bottom that was deforming. That was caught a lot of big talk last week. We ended up breaking through the 540 level, which is the neckline, which projects that we could go potentially up to like $5.80 in the December corn contract. 550 is a psychological number. You saw a lot of sales up underneath there, and we touched 550 and we pulled back for a couple of days. So you saw a lot of farmers selling, even from the commercial side. You see some hedge pressure there around that 550 level. And honestly, like as we broke through 550 overnight, that's whenever producers start getting a little bit nervous. And coming, from last night into this morning, that's what I had a lot of people nervous about is, how do I get out of my sales? What do I do now? How do I buy calls? And I think that's a big fear as a market analyst, that when you start seeing that type of activity and that type of mentality, it becomes fearful on the other side of that. That's when you're bullish, most bullish at the top, and all those terms come in, because that's what happens is people's attitude gets the wrong way as far as what we're looking at to hedge. So the one thing that we looked at was we went to if you look at the April highs or the March highs to the April highs, that downward trend, it went right up to 559. That was right at that area, and so technically it got sold here, sold off again at the end of the day there. Same type of story in the beans. We went up to the 1250 level. That was a very technical, a lot of heavy technical resistance at that level, and we saw it back off after that. So, a disappointing close to say the least. Whenever you're up 40 cents and you back off, I think we ended up backing off in the beans. Ended up being like 15 cents or so off the highs. It didn't hold it through. We saw some profit taking at the end of the day. We'll continue to go back to watching weather and see where this thing wants to take us.
You made a comment in there that I want to hit on, and it was about getting the wrong attitude with your marketing. And I think that is so important, because we see a bit of a rally here. We have some of these worries, and I know a lot of times that can make folks change their minds pretty abruptly and get away from that ever important marketing plan that we sit down and we figure out with our analysts. And I just think that's important to talk about that a little bit, because we don't want to trade on a whim necessarily here when it comes to looking at our bottom line, Jacob.
Absolutely not. And that's what I actually get passionate about. I mean, I can sit and analyze the markets all day long, but look at what we do. We move back and forth on a weather forecast. But when it comes to like your bottom line and what you have available and what you need to sell, and we like to say that, everybody says that every farm's different, and that's true. But there's some tools that can cover a variety of things there, using what kind of option strategy you want to use. Where do we want to put sales targets at? Maybe some guys shouldn't be selling because they're looking at a crop that could potentially be half gone if they're in that drought situation. So all that stuff is very important. But the main factor is, where's your risk at, and what do you have covered? And from a marketing plan, it's always fun to guess where these markets are going to be, and then we can put some sales targets in there. But I would say after we crossed over that 550 level, we went through that level of the neckline that we could potentially see something up to 580. I mean, that does not mean that I'm going to hold everything back, rebuy my hedges, and look for 580 to make the sell. What I'm going to do is I'm going to be more aggressive, but I'm going to be using some put strategies. I'm going to be using some type of option strategy that helps me, decrease my risk, not increase my risk.
Jacob, you touched on the soy complex a little bit. That was the star of the day Tuesday, and I know we had some really good strength in all the veg oils, palm oil and bean oil specifically. We got that news mid-morning about the extension of the EPA with Growth Energy, about the RVOs delaying that a week for that final decision. I'm hearing some rumors out there that could be because they're tweaking some of the numbers, and it could be favorable to renewable diesel, et cetera. It just feels like those things combined really kind of gave the soy complex a pretty solid footing, pretty strong footing on Tuesday.
I think whenever the first allotment of what we were expecting the RFS to come out and say a number of months ago was pretty disappointing to the market. And hopefully we can gain all that back if they're going to change or take that out of the final ruling. And I think if that's the rumor out there right now. I guess it sounds like June 14th. I'm not even sure. It's about a week from now, I think, is when they said they'd come out with the final ruling.
Yep.
And I think we'll end up knowing a lot more about it then. But I think there'll be a lot of talk. I assume that's what the biggest part of the move was. But the one thing that I would probably look at too is the fact that we did see, we haven't seen a whole lot of premium added to the bean market through some of this weather problems. So I think there could be a little bit of that dryness could be added, rolling into some of this bean market as well, along with some potential optimism from the renewable fuels. But look at the bean oil. We were up $1.50 today in the bean oil again, so that we made actually new highs for this move anyway, and I guess new highs for a couple of months here on today's move in the bean oil.
Yeah, June 14th was the original date. They've extended it a week to June 21st. So that's
I'll leave the facts up to you, Jesse. You take care of all the facts, all right?
Well, speaking of facts as well, I just want to pick your brain on this real quick. we got the announcement Tuesday of the Bungie Vterra merger. It's like the worst kept secret in the grain trade. It feels like that this was going to happen. Do you feel like, do you get the sense, maybe talking with other traders at all, did that have any impact on the grain markets at all Tuesday?
I may be mistaken by saying this, but no, I don't think it did. I mean, I think that was something that was been talked about, something that was known. There may be some details down in the depths of that as far as Bungie having all the processing and where the beans are located, what basis levels are going to be doing. There could be something interior in the cash, but I don't think from the futures market of it that it really affected where we're at here at these levels. No.
Well, we're having a conversation today with Jacob Burks of agmarket.net. Jacob, I should touch on the wheat market just a bit. We got that headline mid-morning that Russian President Vladimir Putin's pretty strongly saying he doesn't want to extend the Ukraine grain deal anymore, saying originally they did it to help out African countries, but now it sounds like he's trying to take it off the table once again. We've heard this before, though. And so it feels like to me the market popped on it real quick and then kind of settled back in. And that just feels like what this wheat market has been doing. It's kind of become desensitized to a lot of this Black Sea news, it feels like right now.
Yeah, Vladimir is such a great guy. He took care of all those other countries. I appreciate that. But I would say that news gets looked over pretty quick in the markets. Does it move? Yes, it's going to. It's a big portion of what we're seeing, but I don't know that it's trusted beyond the time that it comes out and hits the market. I mean, so no, the wheat market has been pretty stagnant. We've seen some decent rains, finish out the crop, across the plains. I mean, that's been, really beneficial for those producers out there, and extremely happy they were able to get that. But we're just overpriced. I mean, it doesn't matter where you're looking at from an export market. We're just not competitive here in the wheat market, and so that's something that we have to have negative news come about to get a buoyance. But we're not going to be competitive, and that's just going to be we're going to be out of the export business there for the wheat market.
Well, in case in point, how expensive we are, we have some U.S. flour millers and importers bringing in wheat from overseas. I mean, that's another interesting tidbit in this whole wheat trade as well. Let's talk livestock. I want to dive in here with cattle and hogs with you a little bit. This cattle market started slow on Tuesday morning, thinking, okay, maybe we're just going to have a quiet day, maybe a bit of a soft correction, and then, green on the screen by the close in the live cattle and the feeder cattle trade. This market just doesn't want to seem to stop moving higher, Jacob.
No, I think it's a testament to there's still people out there that are wanting to be long. This is when you see technically traded markets like this ride these different moving averages. I think it was a week ago we broke through the 10-day moving average finally in the feeder cattle, but that 20-day moving average is right there to hold. This last 3 days we've held. I stepped out of the office for 30 minutes. I come back in, and all of a sudden we bounced up, $1.50 higher in the feeder cattle today. And it was, you look back at the charts, and that's exactly what we saw. We saw buyers come in here and willing to buy it. Fundamentally, we haven't broken anything. Like, you keep waiting we haven't had any one of those big events. Whether it's a fire or whether it's some type of processing problem, whether it's weather. We haven't had any of those big events. We've stayed steady in a steady pace. We've had a great spring and summer. There hasn't been a lot of rains, right? I think everybody can attest to that. That also means that there's been a lot of picnics, no picnics canceled. So we've been able to keep that demand strong. In this live cattle, that's what you're waiting to break this thing. You're waiting to see unemployment fall off. You're waiting to see something happen to where that disposable income doesn't go to those higher cuts. And I relate this back to like your gasoline a little bit. We all complained about $4.50, $5 gasoline, but we still drove. I mean, demand eventually came down. Right now, you can see these box beef prices going up to $3.38, I believe we hit today. But we're still buying it. It's still going on the off the grocery store shelves. It's still moving. Now there's rumors that you're starting to see a little bit more pork. Few people go past the beef and walk to the pork aisles. But that's a little bit of a testament to what we've seen in the hogs for the last couple of weeks. But it hasn't slowed down. It hasn't had an inverse reaction to the beef market.
Well, and you think about beef and pork as well, and that discretionary income, and I mean credit card levels for Americans at some of the highest levels we've ever seen. Just thinking about that shift, but we're not quite seeing it yet. I just wonder what it's going to take. And I know we have economic data out this week. We got the consumer price index was out up 0.1%. We got the Fed presumably going to announce a 25 basis point rate hike on Wednesday, but it just doesn't feel like any of that economic news that you alluded to is slowing things down for the consumer to go buy their favorite cuts of beef right now, Jacob. And I just don't know what it will take.
No, I think that I've kind of tried to lay it out like demand's been strong with grilling season. Income's been strong. The unemployment rate hasn't fallen off. There's certain things we haven't seen any type of fire or anything like that knock on wood that we've seen in the past, where all of a sudden just totally dispersed the cash in the futures market and just the feeders from the retail side of things. So right now we've had that perfect storm. We did have a pullback last week. I think it was a very healthy pullback. And like I said, we saw the moving areas. That when we see people buying things off the technical indicators, that just means that there's traders out there that are saying, hey, they don't think this thing's over. And so I think that's a very strong signal to the market that it's healthy. It feels really good, strong right now.
On the hog side, you brought that up a little bit as well. I know June getting ready to go off the board here and getting kind of close with that cash index, and July even coming down a little bit, but it's been a really nice rally in this hog market. And I think maybe finally we found a bottom possibly here just with the way this market has acted, Jake.
I always like to be quiet whenever you talk about the hogs and if you've actually found the bottom or not, but we'll knock on wood there too. But you saw that move down, was it the end of May there, where we saw that V-shaped bottom, and these thinly traded markets, I mean, it just had to clean some people out. It felt like it cleaned some of these traders out, some of these, these weak longs, and all of a sudden, boom, you have that reaction off the bottom. So I don't attest this to a whole lot in the fundamentals, other than, yes, I think the pork prices did rally. You see some rumors that you're seeing some of the breeding herd decrease and some liquidation there, maybe. Inevitably, it was one of those deals where, hey, I think the funds said and the traders said we can't continue to see beef and pork separate that far. There's eventually going to be that move back together, and I think that's what this move's attested for too.
Well, Jacob, let's button this whole conversation up here today. Final thoughts. Obviously, there is a lot going on, plenty of volatility, a lot to consider. What would you say to farmers and ranchers listening in? Any final thoughts you want to reiterate for folks today? I
would say that we're all friendly to cattle. The fundamentals tell us to be. If you're not out there doing something to manage that risk, do it. Do it now. This is something that can fall apart. Same thing you look at the corn market. We saw a nice move up here. We've seen opportunities in corn and beans that we didn't know that we would have. It didn't look like it. I think as you get past certain technical levels, that you want to switch over to a different type of risk management plan. Maybe you are using more options. Find somebody you trust. Get with them. Make sure that you understand what tools are out there to help you out.
Fantastic. Well, if folks need some advice, they need a little help working through those tools, I know you and the team there at agmarket.net have a lot of resources available, either online, your app, a phone call. I know there's a lot of ways to get in touch, isn't there, Jacob?
Yes, sir. Just look us up at the agmarket.net. That's the best way to do it. There's a 30-day free trial of our intel. That's where you get all of our commentary, 30-day free trial. And, just find us there on our team page. You can look up any one of us. Our phone numbers, emails are right there. We'd love to talk to you.
Well, we appreciate the time and the analysis. Jacob Burks with agmarket.net. Always good to talk with you, sir. Have a great week, and we will catch up with you again real soon.
Thanks, Jesse. Thanks for having me. Appreciate it.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.